Hi, everyone, and welcome to today's session. My name is Jan-Philipp Thompson, and I'll be walking you through our webinar with regards to Celonis for accounts payable. We're going to give everyone 1-2 minutes. See, there's a lot of people still joining right now, and then we'll get started. Perfect. All right, so welcome again. My name is Jan-Philipp Thompson, and we'll get started now with today's webinar around Celonis for accounts payable, and with a specific focus on the operational apps that we launched at Celonis Live 3 weeks ago. So let's dive in. First of all, I want to talk a little bit about accounts payable and sort of why we decided to focus on accounts payable as one of the first operational apps that we launched, right? And so the reason being that there's a tremendous value that we see in accounts payable that can still be unlocked. And we saw this in the time before COVID-19, of course, but this is especially relevant now during and also after COVID-19. It's things like optimizing payment timing to improve liquidity, right? It's things like realizing early payment discounts wherever possible, or also improving productivity by the means of eliminating unnecessary tasks by increasing automation. And so it's all of these things, but at the same time, what we're seeing is that sort of today's systems and approaches are not allowing customers to realize all of that value. So we've talked to a large number of our customers and also non-Celonis customers about this. And all of these customers can check the boxes on the systems and approaches that you see on the left-hand side, right? So it's a mix of sort of transactional systems and ERP, AP solutions, etc. And then you have customers that are implementing OCR or have implemented OCR, e-invoicing solutions, RPA is in place quite often too, or approaches like centralizing operations, standardizing processes, or adding more and more KPIs to measure as much as possible. But at the same time, what we're seeing is that there's high expectations sort of set towards an AP department or AP teams, right? And those are you always have to pay on time. Make sure you don't spend $1 or euro too much, and at the same time, make sure that your operations are as efficient and automated as possible. And the approaches and the systems on the left-hand side are allowing sort of customers to get to those targets or to fulfill sort of those expectations. So why is that? So we went a little deeper as well. And that's because there's most often this chronic friction that's constricting sort of the processes and having a significant impact on these goals, on these targets, right? And it's all of sort of the familiar faces of what we call the AP nightmare, whether that's missing goods receipts, right? A late invoice receipt, invoices without POs, payment term mismatches, long approval times, all of those things. And so where do these things come from? It's not there by design, right? But often, or most often, what we found out from those interviews was that this is something that comes from growth. So whether that means sort of that, an additional company was acquired and is bringing together systems, right, or finding a legacy workaround for legacy systems in place. It could also be introduction of new product lines, where then obviously sort of there's more procurement needed and therefore also more sort of AP volume that comes with that, and also reorganizations of the entire company or parts of the company that lead to this. So now we see that this comes from growth and also from success, if you will, right? But the question is then, what does that lead to? And this is something we measured also. So we used Celonis benchmarks for when customers first came to us, right? So before running Celonis. And so this is measured across hundreds of customers in accounts payable. And it's very interesting because what it shows is that, in fact, only a third of invoices are paid on time. On average, 0.1% of spend are duplicates, which might not sound as much in a percentage number, right? But we can multiply this with the overall AP spend, and then that's actually quite significant. And we also see that the touchless invoicing rate is significantly below sort of expectations as well. It's around 20%. So 4 out of 5 invoices require some sort of manual intervention. The existing landscape, and then optimizes for not only one, but multiple accounts payable outcomes, and allows accounts payable teams to over-deliver on those expectations that we were just talking about. And so that's why we introduced 3 weeks ago the operational application for accounts payable that intelligently optimizes AP processes for the right outcomes and the outcomes a customer cares about. And so what does that mean? Let's take a look at how this works. So this is a solution, a unified intelligent solution that optimizes AP operations. And it is built with the targets, the challenges, the desires of sort of all the AP stakeholders in mind. So what are those stakeholder groups? So number one, it is executives that this solution enables to steer the day-to-day operations based on most important outcomes. The second group is the AP managers that are enabled to sense friction or identify sort of points of friction, but also to take prescriptive and automated actions in order to fix those issues that are sort of systematic to their accounts payable teams. And then on the truly operational level, it also enables clerks to prioritize it prioritizes their work in the right way, so they know exactly which invoice to tackle next, and also what is the next best action on each of those invoices based on where the and so those three, how do those work together? The process mining is sort of the foundation for all of it, right? It extracts the data from the relevant systems, so one or multiple systems, as well as sort of desktop-based Excel files, etc., and puts it into the process context, right? So puts it into the end-to-end process context, which can start as far as sort of with a purchase requisition and go down to sort of the invoice or any sort of disputes that come up later on, right? So putting that in the process context and allowing to calculate the right KPIs is very relevant. But then the other part of this is so the AI, which is powered by or brings together the machine learning capabilities of Celonis, the action engine, which allow to sense friction when it comes up. So for an ongoing process, right, and not sort of afterwards, but for ongoing processes, and provides the right guidance, so based on sort of historically what has worked out and which leads to the best outcomes. But then not only diagnosing the issues, but allowing to take action, and that action is as automated sort of as you want it to be, right? And this is also very important. So basically Celonis looks out for certain process patterns, certain events taking place in ongoing processes, and then will enable an action or a whole course of action, whether that's communication in a certain direction, right? It's something that goes back into the original source system or multiple systems, right? So there's different degrees of automation and sort of action here. But the most important thing is that it is triggered in an intelligent way at the right time. And so with that, I would suggest we actually take a look at how this looks like. And the first thing I want to do is I want to walk you through these core capabilities from the analytical perspective. And then in the second step, moving to the newly launched operational app so that it becomes very clear how these two work together. So let me move to the demo. So what we're seeing here now, and I'm starting now with this first capability in this first part, which is really the traditional process mining, which you will very well be aware of. So I'm not going to linger too long on this, but I want to briefly show this is the as-is processes of a purchase to pay organization, right? And what Sloanus is displaying here is the most frequent path that process has taken based on the underlying data and timestamps of the systems. And this most frequent process starts with the creation of the PO. It goes through a goods receipt that's recorded, invoice receipts, and then all the steps that come after that. And what Celonis allows us to do now is that, right now we're looking at around 120,000 occurrences of this process. Now we can start looking at sort of this is being the number one variant of this process. What are sort of other patterns this process is taking? And to be exact, this is actually the first out of 15,000 variations and covering only 23% of the cases. So if we dive deeper with slowness, what we'll see is things occurring like the approval steps that are being skipped, which may or may not be sort of there by design. We can go deeper. We'll see different variations popping up, multiple approval steps, for example, invoices paid too late, or also business rules errors that are popping up. And so we can go on. And so if you really want to get the full picture of these 15,000 different process variations, this is sort of what it looks like. And this is just liquidity by improving days payable outstandings, which is especially relevant now in times of COVID-19. We've enhanced the process with the right process analytics. So we're able to drill down, by whether that's sort of by vendors, by company codes, purchasing groups, etc. And what we're also seeing, and what Celonis is showing us here, is that the mismatch of payment terms is one of the core root causes that can be identified in the data for a low DPO, right? So what we're doing here is this analytical approach of analyzing the process, looking at process variations, breaking them down, localizing them, right? And this is now that we know sort of that the mismatch in payment terms, so payment terms on the invoice differ from what we see or what we have on the PO or in master data, we have the ability to take action. And so how do we set that up? And so again, here I'm still sort of in this role of an analyst, right? Analyzing the process, taking this analytical approach, and now I have the ability to, on the root causes I've identified, to build out these action flows and these automations. So as I mentioned before, you have a trigger. In this case, it would be that Celonis detects for ongoing processes a mismatch in payment terms between PO, contract, and invoice. And then what we could do is say for low-value invoices, right? We follow this route on the top, where we would automatically update the payment terms on the invoice to the longest of those three, right, to improve our cash position. And then also, of course, notify the vendor and the accountant about this. And then for high value invoices, it would rather be a human being having to take a closer look at this invoice in order to take a decision. So what would happen here is the invoice gets, the accountant gets notified that there is a payment term mismatch and could then manually go into the SAP system or trigger from within Celonis this action to update this in the SAP system. And then, of course, also the vendor gets notified. And this is actually, so in summary, a drag and drop way in order to build automations. You see, we have the opportunity to increase and build out these automations with all kinds of sort of out-of-the-box systems that we connect to. So this is how we enable to then identify the friction points, but then also allow to take automated actions. All right, great. So now that we've seen this, let's take a closer look at what this looks like from an operational perspective. So first of all, what I want to say now, we're taking on the role of the business side now. What I showed you before was clearly targeted towards the analytical user, which would be, think of a process excellence person, think of analysts, business analysts identifying issues and coming up with solutions on how to fix this. Now, the operational app, which we've introduced 3 weeks ago, is targeted at these 3 business stakeholder groups that I was talking about earlier: executives, managers, and as well as the operational teams. So let's start with the senior management, the executive level. This would be a person that's responsible for the performance of several departments, so the accounts payable department, but also accounts receivable, procurement, and potentially others as well. And so this could be a VP of finance, a senior controller, or similar. And let's call, for the sake of this demo, let's call that person Elena. So when Elena logs into Celonis, right, what she gets is this overview of high-level strategic outcomes, revenue, expenses, cash balance, but also being able to see the performance of all the departments that she cares about. And so today, Elena is reviewing her cash balance. And what she's seeing is that the outstanding accounts payable and cash balance is going down. So she wants to take a closer look into the departmental performance of accounts payable. And what she's seeing is that the days payable outstanding is dropping significantly, right? From around 60 days to below 20. And this is, of course, something that in times of cash preservation is absolutely key. She wants to take a closer look at. So Celonis is not only visualizing across the board, across departments, what are sort of relevant metrics you want to monitor, but then also surfacing from those different areas opportunities or high impact opportunities for increased financial value. So here, for example, Celonis has detected from the accounts payable, which has Celonis running, as you can see, that there's an underutilization of early payment discounts, although we're paying earlier, right? Which is already something to take a closer look at. We have a dropping days payable outstanding, or also a pretty high volume, an increased volume of manual touches in the process. So it's surfacing these opportunities with a high business impact behind them, and allowing Elena to take a closer look. So as I said, cash preservation is key. So let's take a closer look at what our DPO is doing. And what Elena is seeing is that DPO has consistently been dropping, right? So this is month by month view. We're seeing it's trending downwards, and also if we look at sort of our intercompany benchmark here, this is something that we would want to talk to or notify the accounts payable leaders to take a closer look at this and to turn this around, right? So now Elena has the opportunity to notify them and make sure that this issue gets prioritized and on top of the agenda. So now that we've seen how this works from a leader's perspective, what does that mean for one of those AP managers that just received this request from Elena? So now I'm taking on the role of one AP manager, and let's call that person Thomas. So now Thomas has is now seeing the steering board in front of him. And this is now, of course, tracking much more operational metrics, so process KPIs, right, rather than high-level business outcomes. So here we're looking at, the posting time. The DPO is something that is on here. Touchless invoices, on-time payment, and this is very flexible. There's actually a whole KPI library, and this is just some examples. So we could also be looking at duplicates, lost discounts, etc., and just be adding those to here as well. And now we've gotten the request that we want to prioritize days payable outstanding here for our operational teams. So this is something that we're doing now. So what does that mean? How does this change the way that Thomas, but also his operational teams, are working towards this goal of increasing DPO? So first of all, Thomas can break down DPO by sort of all relevant in all relevant ways that he cares about, right? So over time, by company code, by vendor, etc. But more importantly, what we looked at before, going through the process, identifying patterns and issues in the process that are impacting this KPI, is now something that we're surfacing to Thomas automatically. So, and this is what you see on the right-hand side. We're surfacing systematic blockers and opportunities for improvement of those KPIs based on the processes and the process variations. So what by connecting these KPIs and processes, now Thomas knows that, for example, early payment runs or also short payment terms are things that are significantly having an impact on DPO, and the first things that he should be tackling on a systematic level. So looking at this number one blocker of early payment runs, what Celonis has detected now is that there's a whole set of invoices right now that are scheduled for an upcoming payment run, but they're actually not yet due. And so Celonis is then not only allowed to diagnose this problem, but then also then has a clear recommendation of what to do about it, and it allows you to take that action as well. So you see this overview of invoices. Celonis is recommending to select one, several, or all of those invoices, and then can either sort of share those with the payment team, right? Make sure they're aware of these, or also look at postponing the payment run from within Celonis, right? So here we've connected back to the source system and are able to take an automated action from within Celonis in order to then add or update sort of the payment runs that these invoices are scheduled for. And this is just one example out of many ways and many use cases on sort of detecting an issue, sort of diagnosing the friction point, and taking a rapid action against it to realize the value. So now we've postponed around $3 million worth of invoices by several weeks into to the later payment run. All right, so now that we've seen how this changes the way of work on a manager's level, so tackling systematic issues, let's take a look at how this also changes the way or the invoice or recommended next best actions on each invoice, depending on where that invoice is in the process and the urgency that it's been assigned. So now as Anna, I can go into one of those invoices. And what I'll see here is obviously all the invoice details I need, right? The value, vendor, due date, all those things. But Celonis is recommending now that for this invoice, it's detected better payment terms in the contract or master data than there are in this invoice. So actually 60 versus 30 days. And we can realize a working capital benefit and also improve sort of our cash position by postponing or by updating the payment terms on this invoice. So in a similar way that Thomas was able to take action before, right? Anna is able to capture the full sort of opportunity on this invoice as well. And so what's behind this is actually what I showed you earlier, right? This is the workflow that was set up. So this is a high invoice opportunity. As Anna, I receive this recommendation and then can take action in the source system and make sure that the vendor is also notified, right? So the automation capability we looked at before is precisely what's powering this, and one out of sort of many, many examples. And then, of course, you know, this new way of working for Anna also allows her to flexibly take action on many invoices. So, for example, if we were to sort of select all invoices for a certain vendor and share with sort of the requester for approval, right? These are things that can then be done. So this automation allows to do those things in a much more efficient and automated way. All right, and so last but not least, this workflow that I showed you is just one out of many that would be working towards this goal of improving days payable outstanding, right? So whether that's postponing payment runs, removing sort of payment blocks for invoices to make sure they're not paid too late at the same time, adjusting payment terms, postponing baseline dates for late deliveries. These are all examples of how slowness looks for issues coming in and then intelligently sort of triggers those automations or recommendations and automations in order for the system to work towards the outcome that your organization cares about most. And so then ultimately what that leads to is an improved, so if we think back to the goal that Elena had set out to sort of improve DPO, this is exactly what we're seeing here. So a quarter later, DPO is almost back to the level that it was a couple of quarters earlier. So on the right track and improving again, which in times like this would be specifically necessary, right? So I think this shows very nicely how these three stakeholder groups work together towards improving the same goals with the help of the right technology. So back into the slides. How is this different? And let's do a quick recap of anything sort of that's out there right now and sort of the analytical approach in summary. Number one, and I think we saw this very nicely, is you select an outcome, and what slowness does is it automatically surfaces what's blocking that outcome based on connecting outcomes to processes and being able to identify the impact that certain variations of the process have. So for example, the early payment run issue being one of the top blockers for DPO. Number two, it's this prescriptive guidance and automated actions you can take in order to fix issues, right? So if you think of these automated sort of chain of actions to improve sort of this payment runs or also improving payment terms, etc., right? All of these examples. And number three, it's prioritizing the work for the operational teams. So every single invoice being prioritized according to what you can do about it, and different factors like what is the potential, the value, the number of days that we have left, etc., in order to improve the DPO target. Because at the end of the day, almost every invoice is an opportunity, right? And so at the end of the day, what we're thinking of is, or the way we're thinking of this is processes that are continuously self-correcting for the outcomes that you care about, right? Not just one, also multiple outcomes that you care about. And so the way that sort of changes and the way we've sort of seen this within our customers using the operational apps, the way this changes work is, for executives, from, asking about, are we sure these are the right numbers? We have, Excel reports from different systems. Why is actually they paid on time rate where it is right now, or our DPO where it is right now? Really understanding what's blocking this most. And then also, what are the improvement opportunities we can take? And then what is the percent change after having taken an opportunity? And moving towards a world where we can sort of look at this in an automated way, get real-time answers to those questions, and can track and monitor this continuously. For managers to move from sort of this ability to track performance, and it's really hard to know what's going on, actually doing something against it, actually fixing the process feels almost impossible, or fixing sort of symptoms of issues feels pretty much impossible and late and sort of not very proactive, to a world where we have talked about these systemic process blockers being surfaced, but also prescriptive action flows being recommended at the right time. And then, of course, for clerks who ask themselves, which invoice do I need to work on next? And there's a lot of time that goes into then following up, whether that's sort of in terms of approvals or missing GRs, and I need to understand why, and just a whole lot of invoices every day where these issues sort of just multiply into a world where the invoices are prioritized for you. There's pre-checks that are done, right? So is there a goods receipt missing? If yes, notify somebody. Is there better payment terms, et cetera, et cetera? Are we using the right VAT codes, and so on? And then automating a lot of those very, very routine questions in order for the specialists to focus on the ones where we have high value invoices or more complex tasks at hand. And so if we sort of think about how customers are driving outstanding outcomes in accounts payable today already, it's things like, the Deutsche Telekom, a great example, being able to identify and capture 40 million euros in unrealized discounts. Or think of AkzoNobel that increased their on-time payment rate by 20% by identifying root causes behind payment blocks and tackling those. Another example, Chart Industries, that was able to realize 2 million in savings by identifying late payments and also missed early payment discounts. And so these are just some examples of how customers have been using Celonis to drive outstanding value with in accounts payable today. And we basically took this recipe and created operational apps to enable all of our customers to realize this value as fast as possible, right? So to not only identify value, but realize value as fast as possible, and to step into these footsteps of these, of these great examples that we are seeing here. And so I want to talk a little bit also about, what that means in terms of roadmap. So of course, the journey for accounts for operational apps in finance does not end with accounts payable. So for accounts, what we're looking at is for accounts receivable is, of course, the other big lever in terms of bolstering liquidity, right? And so for accounts receivable, we've already started work on the operational app on that end, and really looking at how can we improve sort of the value that can be realized in the spaces, for example, of collections, being able to collect and to prioritize sort of the right customers, being sure to assess risk properly, right? And then really looking into accounts or optimizing sort of the day sales outstanding, which is sort of the key metric, making sure customers are paying and they're not paying too late, and that we get that cash in the door, right? So that second big lever in terms of cash preservation, but also I think cost optimization. So those are actually the two key pillars that we're seeing in both accounts payable and accounts receivable. And then, of course, if you think of sort of treasury as a whole, that's also something that we're looking at closely. So treasury management that also combines some of the aspects of AP and AR, right? So treasury is what we'll be looking at most, and being able to think of use cases such as being able to directly forecast cash as well, right? And with directly, I mean not an indirect sort of assessment, but more using actual processes to forecast the AP and outstanding AP and AR, and when we can expect that to come in. So I think that will have also very, very nice use cases combining AP and AR worlds. But then the other aspect, and what we've been talking to customers and partners about a lot as well, is the aspect of risk and compliance, right? So being able to focus on sort of tax compliance on an ongoing basis, not just retrospectively, and that, of course, not only tax, but generally, if you think of sort of an internal audit solution that allows you to monitor and make sure to have the right controls in place, and to be able to alert you at the right time, is also and it allows you to take action, and maybe preventive action, then allows you to be prepared for the next audit, right? And then, of course, if you think of sort of the financial close, this is something that's more down the road. So all of these first four is something that we're looking to target now within the 2020. And then beyond that, we're also going to be looking into the calculations of KPIs. And I think so I would take this a little more broadly even. So it's the solution provides the right flexibility. And so we, obviously, sort of this, besides this being very prescriptive sort of guidance and actions you could take, and the KPI library that I showed you, these things that you're seeing can actually be customized to the extent necessary, meaning the dashboard that we looked at initially, right? This executive cockpit. It can look at also other sort of Celonis processes you've connected already. It could be other metrics that could be visualized in there. So that brings the right flexibility with it. But also in terms of the KPI library, if you think of what we looked at there, those were just a few examples. It actually is a broader set of KPIs that can be sort of calculated out of the box that can then be adjusted. So we are very, very aware of the fact that you might need to customize the calculation to your systems and your data, right? So that's absolutely possible within that library. But not only that, it's also the possibility to add more KPIs to that library, right? So there might be other things that you would want your operational teams to be measured against, or for themselves to measure. So this is of course possible. Can I customize the workflows too? Yes. So I think the same goes for automation. I mean, you saw sort of the way this works together. You saw on the analytical side how easy it is, and in a drag and drop way, to focus on and build out these automations. And so whether that's multiple sort of people or stakeholder groups you want to notify and communicate via email, via Slack, or that's sort of targeted towards your SAP system or other systems, right? So these can also be that they come pre-configured, but these can be customized, and also entirely new workflows can be built. And this would be done, however, by a different sort of group of people, right? So the way we see this work best is that the operational app itself is being used by these business user groups. But then if sort of a new automation opportunity is surfaced, right, through Celonis, like by saying, you have missing goods receipts very often, then the business side can of course also request with the COE or with someone from sort of the analytical side to then also build out a workflow that would help tackle this issue that does not come out of the box yet, right? So yes, also very, very flexible. And then I think that's ultimately also, if you think of sort of these process inefficiencies that we looked at, if there's some very custom inefficiencies that Celonis is not looking out for yet within your data, also these things can be added, right? So this balance of full flexibility versus prescriptiveness and out of the box, and this is the balance we want to strike there. All right, next question. Does this replace the action engine? So maybe because not everyone might be familiar, so the action engine is part of the Celonis product portfolio, and is exactly this technology that's powering what we just saw. So the action engine is looking out, and these action engine skills allow to look out for things that are in your, to sense things in your ongoing processes, and then recommend a course of action to take, right? So provide the right sort of context, and then recommend a course of action. So if you think about it this way, it's the operational apps that's powered by action engine technology, but also the automation capability, the process analytics capabilities, all of those things combined. And so if you have action engine already, and you have action engine skills set up for accounts payable, let's say already, then that's great actually. That's really good news. Because what that means is that those can be incorporated directly into the operational app. That means you've already put thought into what are things we want to look out for in sort of operational, in the AP processes. And so we can directly, or this can be directly sort of activated in the operational app, and is sort of bringing those things together. And we obviously have thought about this and really making sure that this transition would be as easy as possible. All right, so let's see, is there any other questions in here? What does the implementation take. So what does a customer need to get started? How, I think this is good. I want to start with sort of how is this maybe different or similar to to the implementation of Celonis before. And so if you think about it, technically the lift for the customer is the same today. So if you think about it, because you still need to connect the underlying system, right? So the SAP accounts, so the accounts payable process in, for example, your SAP system. And for that, we have an out-of-the-box connector in place. So it's really fast and to set up, and then obviously going through some validation, making sure to validate the key KPIs, and then setting up also the right action engine skills. So these things pretty much stay the same. And of course, the necessary customizations can be made. So all of that is very, very similar to as you see today. And I think that from a business perspective, so from a technical perspective, no big difference there. From a business perspective, so there is a little less time spent, I would argue, into this discovery phase, because the solution comes with a lot of sort of really validated KPIs for the accounts payable space, a lot of these blockers that so inefficiencies that the Celonis system knows of already from all customers using Celonis for accounts payable. Essentially all the use cases that are then impacting the target outcomes, and also the skills, so the actions that you would take. So a lot of this comes out of the box, and so already is a great sort of starting point, and that's why I would argue that then the discovery phase would be, so from a business perspective, would be shorter. All right. How is this different from sort of BI within the solution? I think that's also a very interesting question. So if you think about sort of BI itself, BI is very analytical. This application is operational and combines the analytical and the operational. I think that's sort of in a nutshell, like very, very shortly, that would be my answer. But if you think about it, if you go into it a little deeper, BI does provide customizable dashboards, and that's already very useful if you know where to look, and also can set up sort of this static visualization of data, and what KPIs to monitor, etc. Now, what this application provides is, I would say this is an intelligent application with which teams can work and also adjust in the way they work and the way the processes work in order to hit targets, and also have this sort of this route to action or this recommendation in place, right? So if you look at a BI dashboard, sometimes this question may pop up, so what, right? What do I do about this now? And this is, I think, with a purely analytical sort of BI system, will show you maybe, again, like a KPI is going, so it's not where it should be, but at the same time, not giving you sort of a course of action, not helping you understand better where the issues are sort of occurring, why the KPI is the way it is, and then what to do about it, right? So all of these things. And so that's where that's where I clearly see the difference. And also this path back, so taking action, which would then help sort of steer the operations and the underlying store systems, right? And steer them in the right way towards business outcomes. So that's where I think this is a very, very different approach than to just sort of measuring certain KPIs and when you know what you want to measure. Does this include, so other question, does this include systems like OpenText and ReadSoft and other AP automation solutions? Also a very good question. Yes, so one thing we did was we zeroed in on sort of the AP process and are not only looking at SAP, the SAP part of the accounts payable process. So here, what we've really sort of doubled down on is what is relevant for accounts payable, and actually a lot of this starts even before the SAP system. So in a pre-processing system, and that starts when an invoice gets scanned, it goes through the the whole sort of processing until it gets posted. And there's other systems in place there. So this could be, again, like an OpenText, as you said, like a ReadSoft solution. It could also be Excel. So what we've done is we've also built out our connectors to include KPIs, etc., for OpenText, for ReadSoft, or a combination of OpenText and SAP, or ReadSoft and SAP, or Oracle. to include those, and make sure you can look at things like how many approval steps in, let's say, a ReadSoft solution, or are there certain things that are coming up within ReadSoft already, and then allowing you to take action in time. Because obviously once the invoice is posted, it might already be very late or even too late to take the right action, right? And so not only are we connecting to these main AP solutions as well, but also we've built a connector or a synchronization with Excel. And so what that means is, I mean, yes, previously or already today, you can upload an Excel file and add it to your data model, but this requires you to, this would be statically attached to your data model. Now, what we do is we actually automatically sync with Excel files. So anything you do in Excel, the change you make and you save the file, it automatically syncs that information with Celonis, and thereby then allows to, there's several interesting use cases that this enables. So one use case was for one customer, they were saying the plans, the vacation plans of all the operational team members were being done in Excel. This is something they weren't able to do or weren't doing in SAP. And so bringing in this information in addition to the SAP and other systems information, they were able to see, or Celonis actually, the action engine was able to see that if someone is on vacation and has invoices that are allocated towards him or herself or her, right, it would already recommend reassigning to this other, or routing the invoice to this other person that is sort of the replacement for the person going on holidays, right? So it's sometimes very simple things, but then can sort of make the processing of invoices much more efficient by already reflecting these things in sort of one place and not in different places. And so in another customer example here as well was a customer that used in Excel, they were tracking their sort of, they had a so-called approval matrix. So which invoices need to go to to which cost centers and which people specifically. This was actually reflected in an Excel sheet outside of SAP, and so this information, bringing that into Celonis as well, would allow to route those invoices when they're being sent for approval into the to the right direction, to the right person, with a click of a button as well. So these are some great examples of how we've looked at AP and really went into what are the other systems that are relevant for accounts payable, and made sure to connect more and more of those too. So really diving deep on AP itself. Then this is a great question. How do customers get the operational app? So 2 points on that. The first one being, first of all, this is part of, for existing customers, the operational app is part of the existing Intelligent Business Cloud subscription. So that's great. You can use your all of your business users to access these apps as well. So that's great news. Then where do you get it? And that's for everyone that already has Celonis. There's a Celonis App Store in which you can go and request the operational app for AP, right? So there's you'll see in there already promoted the operational apps. You can with a click of a button request the app, and the Celonis team will reach out to you to discuss next steps. If you are not yet a Celonis customer and thereby not yet have access to the App Store, we obviously encourage you to reach out to your contact person at Celonis if you already have one, and if not, just feel free to reach out in general to us. But I think we are happy to do a dedicated session demo, also on a one-on-one setting, and take sort of much more detailed questions if necessary as well. All right. So any other questions? Maybe give it another minute. Otherwise, again, as you see on this slide right here, we will be seeing each other. I will be part of this discussion group as well at 4 p.m. And if not there, then let's stay in touch through the Celonis community, as mentioned before, and learn about sort of upcoming webinars and roundtables that we are planning. So if there's no more questions, with that, I want to thank you very much for joining today. Looking forward to to further sort of discussions, roundtables, webinars in the future, and have a nice day.